All right, everyone, welcome back to the show. This is JR. Here we are picking up Social Ledger Report. There's been quite a few developments this week with the macro, the politics in Washington, and kind of just everything tackling crypto in different ends that we just need to cover it. Unlike last week's or what was it, a few weeks episode, we actually talk more about AI than anything crypto related, so it was kind of interesting. But no, we're back to crypto this week. Before we continue, make sure you like to this. Make sure if you like this video, give it a like if you like it, dislike it if you dislike it. If you want to watch more of this content, check us out on YouTube, Spotify, Apple Podcast. We're live pretty much everywhere. So for this week, we have quite a few stories happening. First and foremost, Bitcoin had a pretty big week. It went from the low 60s to almost 80,000. So that's kind of a big deal for like a few days, or it was a little bit over a week, but you know what I mean. At the same time, all of this is happening. The U.S. government made three crypto-related moves. We'll cover every single one of them. Treasury stepped into the bond market. The SEC proposed a new set of crypto rules, and Trump met with crypto leaders at the White House. We'll cover that as well. Just gonna give you the synopsis and what are some potential developments for all of this. Granted, these news are a little bit old as of when this video will come out. The big question, however, is whether Bitcoin moved because of these announcements or whether traders are simply used to them as a reason to buy. Like anything that is happening that is bullish for crypto, are they going to simply put their money there? Or is it because we're so screwed with like the dollar that people are hedging with Bitcoin? Because I mean that's already happened before with like gold and stuff. So let's first look at Bitcoin. Bitcoin, let me share my screen for this. So if we look at Bitcoin, well, this is for today, but if I look at it for like a month, I mean, you can tell this is a very crazy chart. Like, just a few days before last week, it was sitting at the low 60s even. And then Wednesday, August 19, is when they released the announcement for the bond buybacks, which is all related. And then it just moonshot it from there. Like, man, 18% really. And then if you look in the 5 days, it's sitting like right under 12%. So yeah, I mean, it moonshotted almost 20%, almost. And if you compare this, what is it doing this? And if you compare this to S&P 500 in the last 5 days or even the last month, I mean, in the last month, it's been doing pretty well. But only recently, especially if you look at August 19, it started tanking. Like, it's not good for the dollar. Now, granted, the S&P is doing pretty well. I feel like it's all related to the AI bubble. Like anything AI that is still keeping us from going into a Great Depression. People who have their money on the S&P, ETFs, or on the stock market, they're not doing as bad. So this is very symbolic because obviously the S&P and the stock market has been doing really well recently, but then it kind of flipped where we're starting to see more of a trajectory for Bitcoin. So if you held Bitcoin, you're doing pretty well right now. So always stack a Bitcoin is what I tell my friends and what I do. So not financial advice, but you should look into that. So Bitcoin changed. Bitcoin went up. But the other thing is the U.S. Treasury announced on Wednesday that it would increase its bond buybacks, which in simple terms, it means the government is offering to buy more older government debt to help calm the bond market because obviously with the war in Iran, I mean, the Department of War is the most funded department in the U.S. Government and sitting at over $1 trillion in their budget. And Pete Hegseth, the director or the secretary, was saying, I think a week or two ago, that, man, we need more guns. We're running out of money. We're running out of out of ammo. That's kind of crazy. It's not exactly good for the dollar, obviously. But my point is we're not doing well in that war. It's not only impacting the dollar, but it's also impacting with ripple effects that we'll uncover here today. The yen, the China, the Strait of Hormuz being closed. That's like 20% of the world's oil supply going in every day. 20% of it. So yeah, I mean, it's going to have some ripple effects, including the dollar losing its power. But the point is because the dollar's not doing well, we need to offset some of our losses, like with our bonds. So when the bond market calmed down, interest rates fell, which is good. That means you can put more money into other places rather than paying interest, and that gives investors more confidence because you can buy things like stocks, gold, and Bitcoin. So, this is traditionally really good news whenever interest fall. So I don't expect the S&P or the markets to collapse. In fact, this is all bullish, which is part of the reason why Bitcoin pumped, in my opinion. So let's look at this post. All right. So this is from Bitcoin News on Twitter. Quote, U.S. Treasury doubles long-term debt buybacks after yields hit multi-decade highs. I'm not going to go throughout this post. If you're watching this on YouTube, you can look at it. If not, we'll add the links here in the description if you want to look at it on YouTube. But basically, it kind of just echoing what I just said. But to be more explicit, the U.S. Treasury unexpectedly announced it will at least double the size of its liquidity support buybacks for 10 to 30-year government debt, increasing the maximum from $2 billion to at least $4 billion per operation beginning September 9th. So this was announced on Wednesday, and this is going to take effect in September 9th. So we could possibly start to see more ripple effects with the markets. Like people are putting more of their money into, stocks, ETFs, you name it. The move comes after the 30-year yield. That's such a mixture there. Anyways, a 30-year yield surged to roughly 5.34%. It's the highest level since 2007, which is kind of interesting. But the important numbers here are simple. It basically means Treasury is increasing these buybacks from 2 to 4 billion at a time. The new amounts begin on September 9th. This is not a Federal Reserve situation where they're printing money, but traders, in my opinion, saw it as a sign of that the government is willing to step in when markets become unstable, which, I think that's really a good thing. So let's look at another story here. This is a much longer post, but this is from Raul GMI. You can read this post again. I'm not going to read it, but in my opinion, this is a very well put together, very lengthy post, being more on the technical side, how these things are evolving. So highly recommend to read it. But the main takeaways here is that this person is arguing that the amount of money is not the main story, meaning like the amount that is being taken into effect from 2 to 4 billion is not like the main thing you should look at. The biggest story is instead that the Treasury does not want long-term interest rates rising out of control, because investors, he kind of breaks it over here, but basically investors interpreted this as good news for Bitcoin and for other investments, which again, I've been saying that, but I guess let me see if I can find his main point. So, you can read it all if you want, but he quotes here, with a long end now potentially anchored, the steepening of the curve should come from Warsh, who will probably deliver his part of the grand bargain between the Fed and the Treasury. All of this is to fund the hyperscale capex along with government debt for the first time since the GFC. Both public and private debt as a percentage of GDP are growing, and both are vital. So he's saying, like, again, we're just trying to pay off our debt. Like, that's kind of like the main story, not the 2 to 4 billion, which it makes sense. So here's an opposing view. This is a post from Peter Schiff, and this is like an opposing view on Bitcoin as a whole. He basically says that, to read it, for those tuning in through audio, Bitcoin's rally above 72,000 is a fake out, not a breakout. The Treasury buyback announcement caught markets by surprise. Bitcoin investors have long believed a return to easy money would be the catalyst for gold and Bitcoin to soar, which is true. Like, everyone is waiting for, one, the Bitcoin cycle, two, hedging more against the dollar because the dollar keeps losing its value. And they're only half right. Sell Bitcoin, buy gold. So yeah, he's saying sell Bitcoin. So let's look at some of the comments, because crypto Twitter's probably not going to like this. Fake out is Schiff's default setting, not a market read. This guy probably wrote this with AI. I can tell right away. Gold did the moving today. Spot 5% to 4,300 or almost 4,400. 2-week run intact. Easy money lands in the chart. The actual print. So Yeah, I mean, this guy use people don't use AI to write some of these comments. Just think for yourself. Um, I mean, people are kind of like mixed, I can tell. Like Galaxy My Bitcoin says, I think you mean 73,000, Peter, but to be fair, you'll be spouting the same nonsense when we're at 730,000 for Bitcoin. So, yeah, I mean, some people are just love to hate for the just hate for the love of the game, I guess. But the takeaway here with Peter Schiff, in my opinion, is that he agrees that the Treasury announcement did help the markets, which it's the consolidated point here. But he thinks Bitcoin rally will fade because, I mean, people have been saying that for a long time. But he might be thinking like this is, I don't know him very well, like what his past views are. But to me, he seems like somebody who doesn't believe in Bitcoin for whatever reason, but that's his reason why he thinks it will fade. His argument is that gold will benefit more because it is a longer history as protection against inflation or like hedging against the dollar basically and government debt as a whole. But I think gives us a really good debate because we're now talking, hey, Bitcoin versus gold. Um, where should I put my money? Not whether the Treasury announcement mattered really, because I mean, it matters, but I guess that's just not his argument. Um, let's see. I think I already covered this ad nauseum, but I guess I have a few questions for you guys. So, do you think, and maybe you can answer here in the description, do you think that the government's announcement truly changed the markets, or do you think it simply gave people an excuse to start buying again? Like, are people just looking for a reason to start putting their money because we're all kind of just trying to trade in a good market? Are we just trying to, I mean, we're always trying to make money, but I think everyone is getting tired of everything being so expensive that the moment something no newsworthy of interest falling or the market recovering, people are eager to start trading for the most part. So that's where I'm coming from at least. But a good segue from this is another reason why Bitcoin actually did pretty well is because the SEC finally offers some more consolidated crypto rules. So, okay, I'm done sharing my screen. Okay, great. So, man, we've talked about the SEC for the last year since the inception of this show, but for years, basically, crypto companies have complained that the SEC punish them without clearly explaining the rules. And this is pretty much what we saw being the norm with Gary Gensler in the Biden era administration. But this week, the SEC proposed a new rule called "quote unquote" regulation crypto assets. And basically, the idea is to give crypto companies a legal way to raise money from the public. Say if you're a small project, you could raise up to 5 million. If you're a large project, you could raise as much as 75 million if they provide more information and financial reports. So kind of like ICO, but I don't know if you'd be racing on an ICO, but it's kind of like the same. I want to say it's looking like that's kind of like the path they're taking, not because, or I guess what I'm trying to say is like, obviously an ICO is very different. Like you're buying something, you're allocating money into a token, and you get percentage ownership into that project, but or voting rights even. But in this case, it's just pure raising purposes. Like I'm sure an ICO could somehow play into this, but I really just think that this is a great way to help fund projects and companies through crypto, which I think it could be a lead to ICOs. Not that I think about it more and more. Um, so why don't we share this post real quick? This is from the SEC here on Twitter. It says, and this is as of Tuesday, August 18. Okay, that's interesting. Sorry, just got a text. Let me read that again. So this is from August 18 or Tuesday this last week, and it says, quote unquote, today the SEC proposed new rules, regulation crypto assets that would create a clear and fit for purpose framework for certain investments, contracts, and involving crypto assets. So this is kind of like the sauce of it, what I'm saying. Again, my thoughts are this is important because the SEC is not proposing rules, which we've been missing even as we already know with Gary Gensler before, it was just very hard to do anything in crypto. Coinbase, MetaMask, Uniswap, um, these reputable crypto companies, and probably Binance, if I'm being honest. I don't remember about Binance as much, but all these regulated crypto companies who had establishment here in the U.S. they were being um, they were being sued to oblivion. It was just wasting their money and time. I feel like we stagnated a little bit in innovation for crypto over the last during that time, really, because these were pointless wars. They were this was a pointless war against crypto. Like it pushed development offshore to UK, Southeast Asia, Latin America, Latin. So, it was a pretty bad hit for American companies trying to build on crypto. And I mean, I personally think that's probably the reason why crypto faded pretty quick after like the NFT boom. I mean, NFTs were just very bad, like the iteration that people were using them for. It was a very bad use case, but crypto kind of died really quick. As soon as ChatGPT came out, everybody started doing building on AI. So, I mean, AI is a lot more sticky and it's very productive, so it makes sense. But I feel like we could have seen something different if maybe legislations weren't the previous SEC administration wasn't as sharky, which is suing people for no reason. So this is kind of a big deal because we've already seen and we've already covered the Genius Act that passed last year, and then this year we've seen the Clarity Act kind of like trying to pass, but it's like sitting in oblivion, not sure if it will or won't pass. So that's kind of like the problem. But why don't we talk about Paul Atkins? He is the SEC chair, and I believe he might be on the board on some crypto companies. Quote, hear me now, quote me later, but I forget which ones. Actually, we can ask Grok for this. So basically, here this is the formal announcement coming from the main guy from the SEC, essentially. So what I want to ask Grok is, in what companies does Paul Atkins serve in the board or has stake in? Because I remember reading this a while ago and I know it was a pretty big deal. So if you're watching this on YouTube, if you're tuning in on audio, you can't see, but I'm on Grok here with X trying to ask like, hey, does this guy have any positions on any crypto related companies? Obviously, that would be a big conflict of interest, but you know what? This is gonna sound so bad, but personally, I care more about having the opportunity for companies like mine or other developers to be able to create a product that reaps the benefits of the technology that is crypto and builds cool products that can actually help people. It's a pretty big deal, being able to send money without borders, without high fees, without having to wait, 3 to 5 business days for it to settle because of the banking system, whether you're sending money offshore or within your friend here through Cash App or something. So, anyways, uh, I feel like Paul Atkins is kind of what we need essentially, even if he is serving as the board of someone. So Grok says the current ACC chair, Paul Atkins, no longer actively serves on corporate boards or holds major conflicting stakes as he resigned from external positions and divested per ethics rule and his confirmation commitments. So that's actually a big deal. I was very wrong. He is no longer, he once was, but he's no longer on the boards or holds stakes on any company. So yeah, I mean, this guy is the fucking shit. He is the shit for doing all of this. Like, credit where credit is due. So anyways, I'm gonna play the video for him. We'll do it at double speed.
I pledge to ensure that the United States remains the crypto capital of the world. For too long, issuers and investors had to navigate an activist SEC weaponized against this asset class. The result has been uncertainty and inefficiency, chasing crypto asset innovation.
This is probably too fast. I'm probably gonna have to do 1.5. But yeah, he's talking about the reasons why he's doing this, and again, just unveiling the news
outside of the United States. So today, I'm excited to announce that the SEC is taking the most historic step yet to modernize federal securities regulations for crypto assets. The United States must and will lead. Our new rule proposal, Regulation Crypto Assets, will ensure that we do. Now, let me be clear. The SEC continues to support congressional work on the Clarity Act, and we expect to see the bill reach the president's desk. Under our current statutory authority, we are acting. The work before us is too important. The Commission's March 2026 interpretation explained how a non-security crypto asset may become subject to, and how it may cease to be subject to, an investment contract, which is a security under law. Regulation Crypto Assets provides issuers of those investment contracts with a clear path to comply with federal securities laws within those parameters. Today's proposal sits at the center of this Commission's capital formation agenda and is essential to providing a framework for crypto asset fundraising. It is the Commission's answer to the question that has puzzled innovators since the birth of the blockchain. How can I raise capital to develop a crypto asset while I am still working to develop the network where it will be used? While Congress continues its important work to advance crypto market structure legislation for the president to sign, the world and our markets keep evolving. By moving forward with our current statutory authority, we can help ensure that America remains the world's premier destination to innovate, to raise capital, and to build the next generation of financial infrastructure.
Yeah, so I think he said it very eloquently and very nicely, well said. Basically, like he's trying to make this the capital to build crypto in the world, which I'm wholeheartedly down. Under the new proposal, yes, if the project is no longer controlled or dependent on one company, or excuse me, what I'm trying to say is basically his proposal is trying to answer major questions, which is, can something begin as an investment but later become a normal crypto asset under the SEC guidelines for securities? Under the proposal, the answer could be yes, because it is no longer controlled or dependent on one company or small team. So that's kind of like the synopsis. So let's look at Winklevoss quoting this post, saying, "This is historic. Regulation crypto assets will allow crypto projects to raise money from the public with the proper disclosures. All of those silly bad faith arguments that every crypto is a security are over. Builders will finally be able to build. This is the way." Which, shit, my guy also said very eloquently. I mean, we're all developers. Like, this is a pretty big deal, in my opinion, as well, because not long ago, Robinhood unveiled a fund that is going to back YC-backed companies. So it's giving retail investors access to the opportunities that people who have the deeper pockets, who are the most well connected, they're getting access to the same opportunities that's giving them access to a lot of upside capital. Because when you're investing in one of the biggest accelerators in the world, known as YC, that has a large success rate in producing unicorns, there's so much upside. You're pretty much leaving money on the table by not joining them, by not putting money into any single any single YC company. So for crypto, this would be the similar example as that. Let's see, we've talked about the SEC, we've talked about the Winklevoss. Let's show some criticism now on this side of the story, just because we love a little bit of we love to critical think, and part of it is by viewing opposing sides. So this is from Better Markets. The SEC insists that its proposed crypto rules ensures that investors are adequately protected, yet the SEC is exempting crypto from the very requirements that would protect investors. See the link below, and it's a story. I read this story, and basically Better Markets is arguing that crypto companies are receiving special treatment from other companies that are non-crypto related, which, yes, it's a concern that is very much worth bringing, because it's making fundraising easier for them, and could also make it easier for weak or dishonest projects to take money from regular people, which is definitely something to look into. Like, do your research when you're putting your money on any company or any team. You got to do your research. I mean, yes, people could potentially lose their money, but like anything can happen, really. Like, I mean, shit, we're going to bring up YC's example. There was this company that basically ended up they went to Forbes 30 under 30, and yeah, I mean, they were doing compliance, but they were full of shit. Like, they weren't, I gotta look up the company, sorry. YC company. I believe it's Deal, or it's Delve, that's right. Okay, so I'm talking about Delve. So something similar could happen because, like, this is from TechCrunch, and Delve has parted ways with Y Combinator because Delve was actually frauding a lot of their process for how they do compliance, which is basically their entire business model. So similarly, we could have something similar happening for crypto-related companies, which again, it's a pretty big deal. That is the argument is, if you're a crypto-related company, you actually have it easier to raise capital from retail or the public markets, which I'm assuming retail. This is where I'm thinking it could be an ICO opportunity, but we'll cover more if those stories evolve. So I believe we have one more major story we need to cover and kind of give some thoughts, and that is the Trump. Let's see, it's the White House and Trump bringing in all the crypto leaders and fintech leaders into the White House, and was also talking about a possible Bitcoin purchase because, it's for a few reasons. So the synopsis is Trump invited leaders from like crypto companies like Coinbase, Kraken, Ripple, Robinhood, and other related ones to the White House this week. The meeting showed how much the political relationship with crypto has changed because, obviously, with Gary Gensler, they were outed, they were, being prosecuted for not following the law, even though there was no law to follow. And now, they're getting all this treatment that we've needed where, I don't say we need it, but they're letting them do whatever they want. And it's kind of similar what's happening with AI companies, like data center regulation is very low. Regulation as a whole is very low, just to let these companies build, which, it could be seen both as a good win, a bad thing, a good and a bad thing. But for crypto in particular, like this is a much needed opportunity because we've been oppressed for a long time. So now, this is a post from Brian Armstrong here. So this is from Brian Armstrong, where he said he went to the White House. Basically, his point is that the SEC rules can change under future precedent. Currently, a law passed by Congress would be the harder to reverse. Basically, I'll play the video here in a moment, but basically that the current risk that we have after Trump is that what if we have someone like Gary Gensler coming back and just changes all the progress we've been making? We don't want that. We should probably create some much well-rooted legislation that is passed by Congress so we prevent future progress from being just erased, is what he's saying. So I'm going to play the clip here.
President hosted a number of crypto CEOs and finance CEOs to talk about how we make America the crypto capital of the world. His administration has put out tons of improvements. The Genius Act got passed into law. Chair Atkins and Selig have already started publishing clear rules. But the big topic of discussion was the Clarity Act, which is coming up for a vote. A full Senate floor vote, September 15th. It's really important that got floor time scheduled amongst all the competing priorities. And there was a lot of energy in the room to get it over the finish line. Contact your legislators, go to standwithcrypto.org and let them know how important it is to get clear rules in America and to vote yes on the Clarity Act September 15th. And thank you to President Trump for hosting all of us.
So that's pretty much it. So,
hey y'all, Brian Armstrong here.
It was a kind of a big deal. I'm going to see if I can find a clip where, it's everyone in the White House talking. I was able to find it. So a couple of things happened. So one, yes, all the leaders were talking about like just normal PR, like, yeah, we're very excited. This is the legislation that we need, you name it. Making Trump and the companies all look good. Phenomenal. But at one point during the interview, or I guess during the press hearing at the White House with all of them, a reporter was asking Trump, like, hey, what else is going to happen with Bitcoin? Are you going to buy more Bitcoin? Are you going to continue to build the Treasury? Let me see if I can find it. Here it is. So the question is, and I quote, does the administration have any plans to accumulate sizable amounts of Bitcoin or other cryptocurrencies? And Trump said, certainly, it's been talked about.
Does the administration have any plans to accumulate sizable amounts of Bitcoin or other cryptocurrencies?
Well, it's been talked about. I think I'd probably rely on Paul and the whole group for that. He'll make a decision. You guys will make a decision, and you'll let me know. But certainly, it's been talked about. It's taken a lot of pressure off the dollar. It's been very, very good for the dollar. And I think if you came in with recommendations, two of you, if you came in with some recommendations, I would certainly listen. It seems to be a pretty big subject.
Yep. So
Yes.
right behind him is the Winklevoss twins. I mean, they're twins, so I can't recognize individually who it is, but I do not recognize this person. I've never seen him before. And then I know Brian Armstrong is on his left, or excuse me, on his right, and I'm not sure who is on his left. Well, anyways, yeah. So he was basically saying like, hey, we've already talked about buying more Bitcoin, but he did not announce that the government was buying Bitcoin. He just said, yes, we've talked about it. We're buying sizable amounts. So you do what you will. Maybe some technicality like that could be like, well, he didn't really announce it. He was just answering it. But I mean, him saying it could also be the announcement in of itself. So anyways, I digress. Notice how he said sizable. It comes from the reporter, but not from Trump. So Trump's actual answer is that the idea has been discussed, but not the intention. So that's my point here. But this is from Unusual Wells. And one thing I wanted to cover here is how the story changed online from this turn of events, basically. So this is Wednesday, just the same day that all this was unveiled, pretty much. So this is from Unusual Wells. Highly recommend you follow them on Twitter. They're pretty massive, pretty big deal when it comes to insider trading. Trump has said that the U.S. government is considering plans to purchase and accumulate sizable amounts of Bitcoin and other cryptocurrencies. So asked whether the administration plans to accumulate sizable amounts of Bitcoin, and the president did not rule it out, tying the idea directly to the dollar's strength. Which is very interesting because the dollar has been doing really bad, and if we're depending on it to continue to be strong, that's going to impact the amount that we can allocate into crypto. That's going to impact the amount that, well, at least the government is going to put into crypto, which having a treasury is going to be good against that, and it's a good way to hedge against pretty much the debt, really. I have this theory where I feel that it could be, and maybe this is just me putting in my tinfoil hat and just really thinking about things, shower thoughts, I guess. What if we're intentionally crashing the dollar because we're trying to replace the dollar with some sort of cryptocurrency for the dollar? Like, we already have USDC, USDT, which granted, if we actually replace the dollar, the USDC would collapse because it is backed by bonds. The bonds are supporting the dollar, and we remove the dollar of the equation, we're going to need a new currency. So this new currency could, in theory, in my thoughts, replace USDC. So let me know what you guys think of that. That's a theory. That's a thought that I've been bouncing around, and I just wanted to get you guys' thought on it. But anyways, going back to the topic, Unusual Wells, again, highly recommend them. But what they were talking about is, initially during that press release, Trump didn't say yes, but now it's changes the story that he said yes, because the sizable amount came from the report and not from Trump. But now we're seeing that Trump is saying yes, because the government already has a Bitcoin reserve, and it's made mostly from Bitcoin that was, taken from like the Silk Road or from criminal cases. But the new question is whether they will actively acquire even more Bitcoin, because they haven't sold, as far as my understanding. Or I think they have sold. Actually, I do not want to assume. Let's go ahead and ask Grok real quick. So let me just ask it through here on this thread. Has US Gov sold any Bitcoin? I'm pretty sure they have, but I just don't know the exact amount. Any specific amounts, if at all. Yes, the US government has sold Bitcoin in the past, but not in any confirmed large-scale way, since establishing the strategic Bitcoin reserve in March 2025. So it's actually sold some since 2025, which is very interesting. Before the policy change, the U.S. Marshal Service and other agencies routinely auctioned or sold, seized, or forfeited bitcoins, mainly from cases like Silk Road. Like I said, reliable estimates put the total sold at roughly 195,000 bitcoins between 2014 and 2023, generating between $366 to $422 million. Well, I guess it would be 366 million, but I mean, Bitcoin in 2014, it was extremely low. And this is all in proceeds. Notable examples include in June 2014, just under 30,000 Bitcoins were sold to Tim Draper for $19 million. So that's actually kind of a big deal. Multiple batches in 2014 and 2015 totaling well over 100,000 Bitcoins at a lower price of $270 or $600 range. Later sales, including one in March 2023 of 9,861 Bitcoins for 215 million. So that's, yeah, also Silk Road linked. So, damn. Man, Ross Ulbricht just gave the U.S. government a shit ton of Bitcoin. So that's kind of phenomenal. But I mean, thankfully, he's already been let go of prison. So that's pretty much the end of the episode, guys. If you made it this far, and let us know what you think. You know, I appreciate you all for tuning in. Basically, the TLDR, if you're still watching, was Treasury. The Treasury this time around has helped calm the bond market. The SEC proposed a legal path for crypto companies, and the White House pushed Congress to act and left the door open to acquire more Bitcoin. So overall, very bullish week. This has been for Bitcoin. Not financial advice. I'm putting more of my money on Bitcoin. I would suggest you guys look into Bitcoin more if you already haven't. Again, not financial advice, just some guy on the internet telling you, look into Bitcoin. Learn more about it if you already don't. Anyways, that's it for the show. See you next week.